Hi, this is Kirk with Forex Trading Secrets. In this video we want to talk to you about 7 basic Forex rules for beginners. And believe it or not, this applies to people who have been trading for a while who are struggling and not making money. These same rules will apply. The first thing that we've noticed is that when beginners start, they hear about robots. Oh, I'll just click the button and turn it on, it'll just keep on making money for me. Well, after the people have sold a few of those and they work for a little while, they generally stop working. We've never seen the one that continues to work because it was programmed to do a certain thing when the market was moving in a certain direction or doing a certain thing, and as soon as the market changes, then the robot stops working, and then you either lose your money or you quit making money, and so it becomes a big frustration. The next thing is less is more. Information overload makes us worse traders. One of the main basic tools you need to have is to be able to spot a 5-alarm trade. This is going to be your high probability trade. Would you agree that this is a good place to be trading? Yes, there are a lot of 5-alarm trades going here. Not so many in here. It's too choppy. Any 5-alarm trades here? Yes, there are. There are some more here. There are not 5-alarm trades there. So being able to spot those, if you need to be able to spot them in 2 to 3 seconds, and that will help you to keep on the right side of trading the high probability trades. The third basic rule is that most successful traders make their money from larger time frames. This is where they see the larger trends. So you can see, and this is a 4-hour chart, there was a nice move here. There were signals up in this area to tell you that that was a possibility of taking a good trade. So we move to a smaller time frame. Yes, that would be a little bit easier to trade on this 1-hour time frame. And there are 5-alarm trades in here, as we've talked about before. Number 4 is don't look at the smaller time frames. Let me show you why you may want to move away from the smaller time frames. Let's go to this 30-minute. Okay, that's not too bad. You get the 15, same period. Yeah, you can still trade it, but it starts getting choppy right in here, and you'd be in and out and be taking only a few pips. Now let's look at this on a 5-minute. This is the same time frame. Look at that 5-minute. That would be awfully hard to trade. A lot of pressure. Oh, it got a little easier right in here, but you didn't know that unless you were looking at the larger time frames. So back to the 4-hour time frame, that is the major trend, and maybe the 30-minute and the 1 hour would be about as small as you want to go. You could trade this very successfully on the 1 hour. Suggestion is to make the bigger pips, use the day, the 4-hour, and the 1 hour as your main trading time frames. And occasionally you'll time it on a smaller time frame, but you're really trading the direction of the trend of the larger time frames. Number 5, don't trade the news. Many times the price has already been factored into the move. Wait until good signals form, then trade the signals. And you can trade around the time of the news, but don't trade the news itself. That is trying to guess what it's going to do based on what it says. I've seen many times that you see news that's positive for a particular country, and the market goes a totally opposite direction. And so just be ready to trade what the indicators tell you. Trade what you see, not what you think. Learn to read the market. Don't overthink things. This can be one of the biggest problems for many traders, where they overthink. Instead of saying, okay, there's a 5-alarm trade, enter. Or there's a 3-alarm trade, better stay out. You don't have to think much more than that. But find the trend on the larger time frame and go from there. Number 7. Now your exits are more important than your entries. An exit comes about with good money management. And learn how to manage your trades, and then be willing to close a trade, whether it's a winner or a loser. Closing a winning trade and maybe making 10 less pips is a better deal than closing a losing trade and taking a 10, 20, 30, 40, 50 pip loss because you didn't know when to get out. You wanted it to come back. So those are the 7 basic Forex rules for beginners. Don't use robots. Less is more. Successful traders make money in larger time frames and trends. Don't look at small time frames. Don't trade the news. Trade what you see, not what you think. And your exits are more important than your entries. Hope this is of help to you. So this is the 7 basic Forex rules for beginners, and there are other rules as well, but these will really get you headed in the right direction.